Hey everyone, this is Jay Soloff from Investors Alley, and this is our options trade of the week. Now, this is not a trade from one of my services. It is not a recommendation for any of my products. It is a trade for educational purposes only. That being said, let's get started here by taking a look at Market Chameleon, marketchameleon.com. I'm in the unusual options volume page, which is a great source to see what the day's options action looked like. So here I have it sorted by volume. Generally the stuff with the biggest volume is kind of most likely what's going to be dominating the news cycle. Pfizer, AMD, these are companies, Facebook, these are companies that either had earnings before or are having earnings after. You could see here earnings before market open, after market close. So that should give you some idea of why there's this amount of volume. Now, Pfizer is at the top of the list, traded 12.6 times its regular volume. That is almost 1.7 million shares at the ton. Normally trades 133,000. Now, Pfizer is not a stock you would think of as a rapidly moving stock, so that's why you probably don't see as much volume. But today, up 3%, not huge, but earnings were just fantastic. That's why it traded. Now, generally, when you're seeing this kind of volume, you're not seeing the sort of lopsidedness in the calls and puts. Generally, the more calls that trade, the more bullish it is. Puts, vice versa. It's 94% calls. Almost everything was on the call side, and not just momentum, right? Not just because it was up 3. This is also some forward-looking stuff. The news was really good. The company increased guidance on its vaccines. They're looking to get approval soon on the children's vaccine. They're looking at oral vaccine. So just a lot of stuff going on for Pfizer. That's good news, particularly as it relates to the pandemic and the vaccine. So a lot of people probably taking some longer term positions, some shorter term positions, and we can take a look and kind of see what that is. So here I have the trades from today. I've sorted by quantity, a lot of block trades. So these are generally, block trades are generally going to be more institutional type trades. But right away, I really like this first one here, September 3rd. So it's about 5 weeks or so from now, with the stock at 43.66. Someone looks like they did a covered call. How do I know that? Well, stock contingent means it's tied to stock, and the price is at the bid price, which means it was sold most likely. So calls, so stock being bought, calls being sold. This is a covered call. You could see there's 44 open interest. So this is an opening trade. Now, this is certainly a bullish trade, although not super bullish. And again, Pfizer is not the sort of thing that generally shoots up by 10% at a time. But with the stock at 43, 43 over 43 and a half, you sell the 46, that only gives about $1.34 in upside potential in the stock. However, you are getting 41 cents. That premium is being collected. So in this case, it's about $307,000. If you're looking at that in terms of a return, that's about 1% in just over a month. Now, percent may not seem like a lot, but then if you think about this is only about 5 weeks, you're getting, you multiply that out annualized, and you're talking about 10%. Plus, Pfizer's got a dividend yield of 3.6%. So if you make this trade, which is a relatively safe trade, not including the upside potential that you can get up to 45, if you're just doing this trade and the stock moves sideways, you're earning 10%, plus you're holding the shares, so another 3.6. You're probably earning almost 14% a year on holding a very safe, good company. So really like this trade. It's a good example of a good cover call to have in your portfolio. So here you can see, looking at the chart, you could see the big pop today on earnings. Very positive news. Looking at the options here's September 3rd. You can see there's all that volume there at that 45 strike. So they're selling the options, buying the shares, and this is what it would look. Cover call would look something like this, right? You have a little bit of protection from that premium coming in. You can make money up to 45, and then it's capped. And here you're making, in that point, a couple $100. This would be on a one lot. And then your risk is the same as basically owning the stock, except you lose a little bit less than if you own the stock because you're collecting that premium. So that's what a covered call looks like. Now, if you're in Pfizer, now if you're interested in just buying calls and puts, there's a link to this page for Option Floor Trader Pro. That's my directional trading option service. So go ahead and check that out if that's the sort of thing you're interested in. Otherwise, I will be back next week with another Trade of the Week.